Okay, we're good to go.
Good morning, everyone, and welcome to the first meeting of the Board of Directors of the Connecticut Paid Leave Authority for 2026. I'm going to call this meeting to order. The time is 9:02 a.m. Amber, could you please take a roll call?
Yes, thanks, Molly. Okay. Ava Bermudez Zimmerman,
Present.
Isha Canada will not be joining us today. Adrian Cochran,
Present.
Andrea Comer will not be joining us today. Sheila Hummel, we'll circle back for Sheila. Ellen McKitterick,
Present.
Eleanor Michael will be joining us shortly. Fran Pastore will not be joining us today. David Salazar Austin,
Present.
Mike Soltis,
Present.
Molly Weston Williamson,
Present.
Holly Williams,
Present.
Janae Woods Weber,
Present.
Justin Zartman,
Present.
Melissa Gibran.
Here.
Thank you. We have a quorum.
Thank you, Amber. Good morning, everybody. I also want to acknowledge at this point we have several members of the public who have joined us today. Thank you so much. We're glad to have you here. The first substantive item on our agenda is the review and approval of the December 11th, 2025 meeting minutes. Is there a motion to approve?
So moved.
Thank you, Justin. Is there a second?
Second. Oh,
I heard lots of seconds. I don't know who we heard first. I heard Adrian.
No.
Not Adrian. Okay.
oh,
We should.
Holly Williams. I think it was Melissa and I. So
Thank
whomever.
you, Holly. Is there any discussion on the December 11th, 2025 meeting minutes? Okay, hearing none. All those in favor of approving the December 11th, 2025 meeting minutes, please say aye. Aye.
Aye.
Aye.
Any opposed, please say nay. Any abstentions? Okay, the ayes have it. Thank you so much. Next up, we're going to move on to the discussion and the planned vote to adopt proposed revisions to the Finance and Accounting Manual. Michael, the floor is yours.
Thank you so much, Molly, and good morning, everybody. Happy New Year. This one should be quick. Back in September of last year, the board had voted to post a couple of policies that make up the Finance and Accounting Manual. There was the actual finance policy itself and the credit card policy, and there were some revisions that the finance team had recommended for both of those. We posted them in September. We're finally getting around to actually asking for the board to officially adopt them. Fortunately, there were no public comments, no public questions that we received regarding either of those. So the ask is for the board to adopt the same version that you saw back in September. Happy to take any questions you may have. If they're very, very technical questions, obviously I'll have to refer to Dave to answer those, but happy to take them if you have any.
Any questions from Michael or Dave on the proposed revisions to the Finance and Accounting Manual? Okay. Is there a motion to adopt the proposed revisions to the Finance and Accounting Manual?
So moved. This is Adrian.
Thank you, Adrian. Is there a second?
Second.
Any discussion on the motion? Okay. All those in favor of adopting the proposed revisions to the Finance and Accounting Manual, please say aye. Aye.
Aye.
Aye.
Any opposed? Any abstentions? Thank you, everybody. The ayes have it. And I want to acknowledge that Sheila Hummel has joined us as well.
Good morning.
Good morning. Next on our agenda is the discussion and vote to adopt proposed revisions to the private plan audit guide. So I'll turn it back over to Michael.
Thank you so much. So this was a policy change that the board had seen back in November that we posted for public comment. That comment period closed, I believe it was December 26th. I'm going to share my screen briefly to just show you. We did not receive any public comments regarding that policy either, but we did have an internal conversation and we thought we had one edit that would be useful for us to make before we officially adopt those changes. In the original version you all had seen back in November, we have a requirement for all of these private plan audits that they provide us with the annual notice that's required under Connecticut General Statute 31-49Q that applies to both paid leave and FMLA. It's a required notice for all employers in Connecticut. We do check that as part of the audit. What we thought during the public comment period we should add is potentially other notices that are required. And this is meant to be future looking. At the moment, there are no current notices that we're aware of that are required under either statute or based on our policies. But in case in the future we do have a new notice requirement in our policies, or if the legislature passes a law requiring some notice related to paid leave, we thought, why not put that in our guide today, so we don't have to go back and do this all over again and revise the audit guide in the future. So really meant to be preparing for future changes and not so much impactful to today. So other than that change, the other edits that were posted for public comment are the same ones that we would like to adopt today. Once again, happy to take any questions about that, but the ask would be for the board to adopt the recommended changes.
Thank you, Michael. Are there any questions for Michael about the proposed revisions to the private plan audit guide? Okay. Is there a motion to adopt the proposed revisions to the private plan audit guide?
So moved.
Thank you, Justin. Is there a second?
Second.
Thank you. Any discussion on the motion? Hearing none, all those in favor of adopting the proposed revisions to the private plan audit guide, please say aye.
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 Any opposed to adopting the proposed revisions to the private plan audit guide? Any abstentions? The ayes have it, and the proposed revisions are approved. Thank you so much, everyone. We're going to continue on our Michael morning by moving on to a state of business update related to private plans. So I'm going to turn it back over to Michael here.
Thank you again, Molly. And I promise this is the last time you'll hear from me, or at least I'll have a presentation prepared. So share my screen again. And I also apologize. The current agenda says this is referencing the audit specifically, but this is meant to be an overview of private plans generally, not specific to audits. If you want an update on audits on the private plan side, they're going well, no concerns. I think most employers and insurance companies do find them to be helpful, and we help them get into compliance, and the issues we've seen have not been sort of unexpected or out of line of what you sort of expect given the program. When we talk about private plans, if anyone's not aware of what we mean, this is the alternate method for an employer to provide paid leave coverage to their employees rather than using the state program. The important thing to note is that private plans must offer the same or better benefits than the public program, and that while that private plan exemption is in place, there's no contributions required to the public program by those employees. Employers can take deductions from employees and use those towards the private plan, but similar to that earlier rule, they can't take more than the public program does. And all those funds need to be used for the private plan. We do have a process for employers if they would like to use a private plan. There's an education process. The employees in Connecticut must be allowed to vote in favor of the plan. And if they don't get a majority of employees to vote for that private plan, the employer stays under the public program. We approve these private plan exemptions for a 3-year period, and we start those at the beginning of each calendar quarter. At the end of that 3-year period, if the employer would like to remain under a private plan, we basically make them go through the process all over again, educate their employees, hold a new vote, and submit that application to us. Similarly, if they make any material changes to that private plan before the end of that 3-year period, including a change to insurance carriers, similarly, we make them go through the process again and hold another vote. So that out of the way, I do want to talk a little bit about the data we have about the current state of private plans. So there's 2 options at the moment for private plans. There's a fully insured option and a self-insured option. Self-insured basically means the employer is financially responsible for the claim dollars that go out the door. Fully insured, on the other hand, is when they pay a premium to an insurance company and the insurance carrier ends up being responsible for any claim dollars. As you can see, vast majority of our private plans use the fully insured model, with less than 10%, I think it's actually around 7%, using self-insured. Some of those self-insured do use a carrier or other TPA to administer the claims, but ultimately it's the employer's dollars on the hook for those claims. Moving to the top right, that 851 employers of the private plan is a little bit misleading because the way the Connecticut Paid Leave Authority treats employers is that every entity with its own FEIN is treated like a unique employer, and they have their own registration. And a large number of our private plans are related to another employer, another FEIN. So It's likely that we have around 500 to 600 total private plans when you consider subsidiaries or jointly owned companies that have separate private plans in our registration, but likely are covered under the same umbrella policy. We only have about 416 that are truly unique employers where they only have one account that has a private plan. Looking at applications we've received since January 1st of 2021, we've had over 1,900 total applications. The vast majority of them are approved. 7.7% were denied, 4.5% were withdrawn by the employer, and both of those categories may end up having a separate application later approved. So it's rare that we have an employer denied and never come back and try again. There were 2 total applications that were initially approved, but we withdrew those approvals based on information the employer told us after we had made that approval. And speaking specifically to fully insured plans, there are currently 19 insurance carriers approved by the insurance department to offer Connecticut paid leave private plans, although at the moment only 17 have customers with private plans. Moving on to comparing those private plans to the overall program. All of these numbers are very much our best estimates and not meant to be exact. It's very difficult sometimes to even get a sense for how many employees there are in the state of Connecticut. Obviously, employees can, retire or leave their company, move to a new company. You have an employee who's employed by both an employer with a private plan and a different employer without a private plan. So getting the exact numbers are always a little bit of guesswork. But we think there's approximately 1.5 million Connecticut employees covered by the program overall, and 59,000 of them are covered by a private plan. That's about 4% of the total covered population. When we talk about contributions and sort of because they don't have to contribute to the public program, trying to estimate how much we lose out on contributions because of the existence of private plans, we think there's between 5 billion and 6.2 billion in estimated subject earnings. At least this is from the 2024 year, which is the last year we have an annual report for, which would be equivalent to about $25 to $31 million in contributions that we did not receive for the public program. Comparing that to the actual contributions we received of 472 million, it's around 7%. That's obvious contributions. We also avoid having to pay those claims because they have a private plan. So based on that same year, I'm estimating about 29.5 million in claim dollars that were paid that year. To the Policy and Personnel Committee folks, a couple days ago, this number was lower. I think it was around 23, 24 million. I actually ran the numbers, and that's where so the 29.5 is my current best estimate for what claims we avoided having to pay because of the existence of private plans. Moving to the employer side, as I said before, 851 separate Connecticut employers covered by a private plan. That's about half of 1%, the total covered employers. If you look at those two numbers, the 0.5% of covered employers and the 4% of covered employees, you might think that the private plans skew towards the larger end of the employer population. It doesn't seem to be that way, at least when we're talking about the very large employers in Connecticut. Of the top 50 employers in Connecticut that are covered by the program, only 3 currently have a private plan, and only one of those is within the top 25 largest. And looking at the distribution of the different sizes of employers, more than half of them fall in the category of under 25 lives. Now, as I said before, because of the joint ownership, parent, subsidiary, and how we treat those separately, there may be some that are part of a large organization, but they show up as a small employer in this chart. And you may have some employers who are on a nationwide basis very large, but they have a small presence in Connecticut and have a private plan. So it's not always the easiest to figure out, which type of employer would be likely to go private, but at least as far as what we're seeing, there are a very large number of small employers in Connecticut that have private plans. And then just the last little bit of data element I wanted to provide. Of the 851 current employers with a private plan, 154 of them have never been part of the public program. They got their exemption January or the first quarter of 2021 and have renewed their exemption every time it came up. So that is all the data I have. Oh, sorry, one more thing. Comparing us to other states. So that 4% of employees covered under the private plans in Connecticut, how does that compare to other states that have paid leave programs, particularly the ones that have paid leave programs that are older than ours? It's a little bit difficult to find some of this data. Some states are better about publishing it than others. So I tried to use the best available information I had. Some of it's a little bit older. So Massachusetts, for example, the last data I could find was from 2021. They estimated about 1/3 of their employees are covered by a private plan. Now, a little caveat to that, some states, and it might even be the majority of them at this point, allow a private plan for just the medical part of the program, just the family part of the program, or both. And I would not be surprised if of this 33%, a large portion of that are just covered under the medical portion, and they stay under the public program for the family. The reason for that is it's very traditional for employers to have a short-term disability program, and it's an easy lift to take that short-term disability program and convert it into something more like a medical leave program. So employers may have been more likely to do that on the private side and stayed with the public side for the family. Moving to New Jersey, we have a little less than a quarter of employees in New Jersey covered by a private plan for the medical, but less than 1% for the family. For California and Washington, they're sitting at about 3.4 and 3% of their employees covered by a private plan. But the interesting thing about those states is they seem to only allow self-insured plans. And if you remember what I said before, the vast majority of our plans are fully insured. And had those states either allowed or had it made it easier to do insured plans, I think those numbers would go up in those states. So that's the comparison basically of the states that precede us. Happy to look into more data about future states if that's helpful. Rhode Island and Washington, D.C. are not good comparisons because they don't allow private plans. And New York is not helpful because they're almost entirely administered through private plans. I think that's it for current data, but I did want to take a moment to look at historic trends. So this is what we're seeing as far as applications that are submitted and their effective date, for the approved ones. As you can see, January 1st tends to be a very common effective date for new private plans. It's almost always more private plans submitted with that effective date than the quarters that surround it. The one time it doesn't is this January 1st, 2022, which is just a fluke of our process. We changed the way we made plans effective from going to retroactive approval to looking forward approvals. I think a lot of the 10/1 and 4/1 2022 effective dates would have been 1/1 had we followed the same rules. So very common for employers to make decisions around January 1st for their private plan effective dates. If we break these numbers down a little bit further and look at brand new private plans versus renewing private plans, you can see a large portion of the recent activity has been renewing private plans. And why is that important? Basically because that doesn't change the number of private plans in existence. It just continues existing private plans. So the brand new ones are the ones that actually add to the total number of people covered by private plans. We can also break down those renewals into two categories. We've got those that renew due to a material change in their private plan versus those that renew due to the end of their 3-year original exemption period. And obviously, as you can see, the first 3 years, the only renewals were because of a material change. But over time, a larger portion of those renewals are just people hitting the end of their 3-year period and renewing their private plan exemption. An interesting thing is January 1st tends to be the largest segment of material changes, which sort of my theory is they're probably changing their other lines of coverage. It's very common for employers to change their long-term disability, short-term disability, life insurance around January 1st. Likely the paid leave private plan just goes along for the ride with those. It's almost treated as an add-on sometimes to short-term disability. So that's the new applications and renewing applications. The last sort of detail is the terminating private plans and the ones coming back to the public program. That is this bar in red. So as you can see, a lot of activity, particularly the last 2 years, on employers coming back to the public program after having a private plan for a couple of years. This is obviously sort of misleading because it adds to the number of private plans. So I created this last chart to show basically the number of private plans over time. As you can see, first year or two, pretty large growth in private plans. It's somewhat slowed down the growth, but it is still growing. I wouldn't read too much into this last quarter where we sort of have less private plans January 1st than we had October 1st. That happened a couple of other times during the course of this few years. I expect it to still go up, but certainly at a much slower pace than we saw in year 1 and 2. So that is it for my presentation. Stop sharing. Happy to take any questions, or if anyone has anything else you'd like me to research and come back to the board with, happy to do that as well.
I see Melissa.
Thank you so much. I just curious, seeing the growth from the inception to today, I was a little surprised. I thought it would be the opposite. I thought you'd see more and more people turning to the state plan. So any thoughts on why that growth continued?
Yeah, so I think it's growing, but sort of not growing at the same pace it did before. So that first year, we saw a large number of private plans because that was sort of the best year from a financial perspective to start a private plan because you didn't pay anything to the public program and your private plan didn't start until 1/1/22. So that's when you started having to pay money. So from a financial perspective, it's not surprising that first year had a lot. Going forward, sort of, I think I'd blame it on there's no sales reps for the public program. No one's out here trying to convince employers with private plans to go to the public program, but there are on the private side. So there's sort of an imbalance as far as folks trying to get employers into one bucket or the other. I actually think that the numbers are pretty good. That the 4% that are covered is not sort of, I think I said this in the Policy and Personnel Committee meeting. I look at private plans somewhat as a report card on us. You know, the worse we do, the more likely they would want to go private. And the fact that it stayed somewhere between 3 to 4% for the life of the program, I actually like those numbers. So I think it will grow over time because there's just opportunities for new sales from insurance companies, and maybe some integration that they can do with their other lines of business that we just can't do. So file one claim with your carrier for STD, paid leave, FMLA. We can't compete with that. But I don't look at it as that an indication that we're doing anything wrong on the public side.
Yeah, no, I just want to be clear. I certainly wasn't. I just was really because of the ease for employers to use the program. I really was just a little bit surprised by it. I'm not on the policy committee, so it was the first time I saw that graph, and I was just curious. But I think you're right. I think having it become flat in that growth is also very indicative of the success. So I appreciate that. Thank you.
Thank you.
I just wanted to add to, as more states come on board, we do know that some multi-state employers prefer private plans because it gives them a little bit more control over offering the same benefits to all of their employees across the states. So I think as you see more and more states having these programs, they can't just use the same plan because we have very specific requirements that most other states don't have. But I think you do sort of have that impulse of kind of going private if you have multiple states covered by paid leave.
You know, that's a really good point. I hadn't thought about the multi-state impact of a company. I think that's a good point. Thanks.
Thank you, Melissa. Thank you, team. Do other folks have questions? I had a follow-up question related to Melissa's question. So that like red chart is charting the number of private plans over time. Do we know what the trends are in terms of number of workers covered by private plans over time? Is it roughly similar? Are we seeing growth? Like, do we have that information, or is that something we need to look into?
It would be a little bit difficult to get that information. The assumption is that it would sort of track similarly, that as the number of employers grows, but it's a little bit lumpier because, you know, obviously larger employers, you know, could be it adds one more employer, but could add 5,000, 10,000 more employees. We did have one large bump. There was a hospital group that went private. I think it was 1/1/25 that ended up adding about 10,000. So we were sitting around 49,000 for a while. It bumped up to 59,000 last year. I can try to find the data. It's a little bit harder to collect because we get annual reports from employers on their private plans, and we can look at quarterly like DOL data, but it's hard sometimes the way the system looks at it, it looks at the historical view of current private plans. What was their quarterly employees in the past? It misses the ones who had a private plan but no longer do. So we have to go and sort of do research on a case-by-case basis into probably DOL records to find that as far as employee counts. I'm happy to do that, but it would just take some time.
Got it. Well, thank you for that context, and it makes sense that it largely sort of roughly tracks.
Mm-hmm.
Anyone else with questions or comments for Michael or on this topic? Well, I want to say thank you again for this. I think as folks know, I am currently working on a report comparing state-to-state private plan take-up. So this is extremely helpful to me personally, and also will have some additional and more updated statistics on other states to be able to share back, hopefully within the next month or two.
Excellent.
I'm waiting for a few states to come in, especially as we have 2 new state paid leave programs that just came online a couple days ago that we're working to incorporate into our data. Thank you so much, Michael, Arian, and team, and thank you, Melissa, for that excellent question. We're going to move on to our next item on the agenda. We have a state of business update on information technology. So I'm going to turn it over to Matt.
Yep. Thank you. I'm going to share my screen. Give me just a second here.
You can see your screen, Matt.
All right, perfect. Thank you. So hello, everyone, and thank you for having me on today. What I'm going to cover is just a high-level overview of basically how IT supports the business operations of the Connecticut Paid Leave Authority. Moving on to the first real slide. Just want to give you at the highest level, right, 50,000 foot level or so. The perspective is that the Connecticut Paid Leave Program is administered by two primary entities, one being Connecticut Paid Leave Authority, and the other one is our claim benefit administration vendor, AFLAC. So, from a high level perspective, obviously I have some additional lower level content on the next couple slides, but just to give you perspective, AFLAC really just does the benefit claim administration portion, and the authority really does the rest of the administration, right? So everything from employer registration, private plan administration, as Michael just reviewed, contribution administration, outreach and engagement, benefit administration, oversight. There's a lot there, right? So again, kind of all the far majority of our operations are kind of in-house there. On the next slide, which I'll go to in just a second, you will notice I'm going to start with the Connecticut Paid Leave Authority, and again, kind of that high-level overview. Again, it is still a high-level overview, maybe at a 30,000 foot level. I don't get down to like all our applications. Really try to kept it at the feature and capabilities level. But these are features and capabilities that are developed or were developed specifically for the Connecticut Paid Leave Program itself. So some of the things that you will not see though are some of the enterprise software capabilities that might be supported by the BITS team. So everything from things such as our Windows operating system on our laptops, right? Microsoft Word and Office, the entire suite, Teams, SharePoint, things of that nature are not going to be represented here. Additionally, we do use quite a bit of standalone pieces of software that are not integrated with our core platform. So those are also not going to be displayed, but those things are items such as QuickBooks, for example, for our accounting, MailChimp for some of our electronic newsletters, project management tools for that we utilize heavily on the IT side to keep track of all our work efforts and progress those work efforts. So again, what I'm going to focus on is primarily the capabilities that support the program, and again, kind of the stuff that we have built out in a custom fashion. So on this slide here, I realize this is busy, but again, this is still a very, very high level overview. So I know these slides, I only have a couple slides, but they are quite dense. But there's a lot that goes on the IT side. So this diagram again shows just the major capabilities. As I mentioned, there's a lot of additional layers of detail here that we're not going to get into today. But just for some context, these capabilities and solutions are comprised of roughly 27 different pieces of software or applications that come together to, as a whole to administer the program. In addition, there's another 22 pieces of software, again, kind of that are used just straight out of the box without any additional integrations. Again, some of those things that I mentioned, right? Office, QuickBooks, MailChimp, etc. So what I want to do is maybe start at the top left here in this overview. I'll first point out as well, that there are a couple boxes here that are highlighted in yellow, and that depicts some of the major initiatives that we completed in 2025. But again, starting at the very top left here, you'll see here we have our websites. So starting at the very top, we have our public website. You'll notice that the website is divided into two. We have the public and authenticated portion. So the public website is built on the same technology, by the way, that supports many of the ct.gov websites. For example, portal.ct.gov. And this platform does contain a quite robust content management system, which really allows our most of the content changes to be made and implemented without the support of IT team members or actual deliverables and IT releases. So a very good feature there. From the capabilities that we support on a public website, obviously we have our public content, information about the program, how it's administered, etc. Different resources and guides, whether it's calculators, contribution calculators, benefit calculators, videos around how to maybe register, how to submit claims, things of that nature. We do have obviously frequently asked questions, a calendar of events, as well as a contact us feature for any questions that that our constituents may have. Then moving on to the Authenticator website, so the box right below that, which is primarily utilized by our employers and third-party payroll administrators. So this is really more geared towards, again, that employer population so that they can remit their filings and payments to us. However, some of the capabilities that you see supported here are, first of all, the contact information. So the employer, the individuals from the employers, right, that represent those employers, they register with us. So we do have their contact information. We do kind of list out all their, as part of registration. Once they register, one or multiple businesses, they do have a listing of all their businesses, and they can manage those businesses on, again, that authenticated site. They can see all their filings and payments. Obviously, they can file and make a payment as well. And again, one of our newer capabilities last year is the ability to amend filings and payments. So prior to that capability, we had to take replacement filings and payments, which was a little bit of a hassle and challenge, right? Not the best process for employers and us. So that made a significant improvement so that, again, they can just modify their filing, and then if they owe us more, they can just pay us the difference thereof, or now if they owe us less, we can reimburse them for that difference as well. The next capability, again, that we finished delivering at the very beginning of 25 is our outstanding filings and payments. So this basically shows like all the any late filings and payments that happen late, right, or are still due, so haven't been filed yet. So again, we present the status quarter by quarter to our employers so they know exactly kind of what they're on a hook for what time period. We do also have the private plan application capability, so they can submit their private plan applications through the portal, along with any supporting documentation. They also have access to inquiries, which basically are any prior contact us cases. So they can kind of see the statuses of what happened with those questions. And then we also opened up the capability for employers to have a limited view into the claims for their employees. And that covers a roughly 12-month period of claims. The one portion here that I think I forgot to mention is that the authenticated website it does utilize our enterprise or BITS identity platform, so for user registration and logins. So what this means is that when users come to our website, we redirect them basically to login.ct.gov so that they can create an account there and use that for our website as well as Aflac's website. So the great feature about using that state identity platform is that allows our constituents to register once, right, and use that one login across multiple agencies. So as an example, I can log in, I can go file a claim with Connecticut Paid Leave, and then I could go to, for example, Connecticut DMV and renew my car registration all without having to re-log in or use a different set of credentials. So definitely a nice feature for our constituents, kind of having a one identity for individuals that can do business across our different state agencies. I will move on to the lower portion of the left-hand side, which is our core platform. So that core platform is obviously integrated with our website. So it does, take in data from the website, and it also presents data to the website itself. However, the core platform is really intended for internal facing operations and features. And I did list out, again, kind of our major features. Again, there's a lot more under the covers here, but just to give you a little bit of perspective, we do have some case management capabilities. So for all the contact us cases that come in, we do get over 2,000 cases per month. And we do have some automation and routing of those. So, based on the case type, we'll route it to the appropriate operations team for further review and answer. We obviously have the history of all the filings and payments by employers. We also have the payment and refund administration now. So the refund administration really kind of went along with our amended returns as well. So now we can do partial refunds. So prior to this capability, as I mentioned before, right, employers didn't have the ability to just submit a change in filing. They basically had to do a full replacement. Now that became a challenge for us to remit differences in dollars owed to us. And we had to kind of refund the entire amount and then have them pay us the full amount back, whatever the difference was. Now we can just kind of refund them the difference between what they originally paid versus what their updated filing is. So again, kind of eases that administrative burden on our team, and eases some of the administrative burdens and financial burdens on the employers as well. It makes the process a lot more efficient and just better around. We also have our fund recovery administration. So this is for outstanding filings and payments. Again, we can kind of see who is late with any of their filings. We see kind of what penalties and interest is also applicable on those. So again, kind of gives us that perspective of everything around fund recovery. Again, many different features and capabilities underneath that. But I think at this point, we'll keep it at that level. We do have private plan administration. So again, as those private plan applications come in, we can review them from our system. We can communicate back and forth with the filers of those if there's additional information that's needed, etc. So there's a whole workflow within that. We also can manage our knowledge articles within this core platform. These knowledge articles or a portion of them is really what is surfaced as the FAQs on a public website. We obviously have some automation and workflows that we do try to automate as much as we can in what makes sense to automate. So the platform does allow for multiple types of automations, whether it's code or kind of point and click. We do try to utilize the mostly point and click features instead of code features because those are obviously easier to support and cheaper to support as well. We do also have some document generation. supported within the core platform. That is primarily used for fund recovery notices that we send out to our employers on a monthly cadence. And then we also have some operational reporting and dashboard capabilities within a core platform. With this, however, I will say that these are quite limited. There are some limitations on the types of reports and or complexity of reports that we can create. So we are connecting Tableau into the core platform so we can actually do some more complex and complicated reporting and provide some more feature-rich dashboards to our operational teams. And then lastly, we do have obviously all our data and file storage administration within the core platform. So we do try to centralize that data so that, again, from a reporting and accessibility perspective, that is the easiest and most efficient way for us to manage all our data. You will also notice in the middle here, we have an integration platform. This is an enterprise integration platform that is supported by the BITS team. And there are really two parts of this. So this supports both real-time processing as well as batch processing. A lot of our integration partners do share data with us via files, right? So we'll call batch files that we then consume via APIs primarily into our core platform. However, we do have some extracts from our core platform as well that we then send on to our partners. So we also utilize that integration platform for those outbound communications and data exchanges. And the API platform, besides processing those files, batch files, we do have some APIs which allow real-time data exchange as well. One such interface that we built is for Aflac so that they can validate or really retrieve employer information from us, specifically for some claim eligibility. So especially on the employers, we want to ensure that employers who have private plans are, identified, because obviously their claims should not be submitted to Aflac, right? So that is one of the checks as part of our claim eligibility to verify that, again, is an employer a private plan, and therefore should they really be coming to us for benefits, right? And then the other main validation there on that employer participation is for sole props. So if someone is identified as a sole proprietor, they have to opt into the program as a sole proprietor. So that's another validation point there, done in real time between Aflac and Connecticut Paid Leave Authority. And then at a high level, on the right-hand side, I do have some of the integration partners that we interface with. And I try to group these into some high-level capabilities or features that those partners support or help us with. So at the very top right, we have our contributions. So this is kind of all the money that comes into us. From a contribution processing perspective, we utilize multiple partners. Bank of America is one of them. Stripe and Blackthorn are additional partners. They really help us with the payment processing. There are some TPAs, I'll say, third-party payroll administrators, that will send us contributions directly to Bank of America, right, via a wire. And then we do get notified from Bank of America about those contributions. So there are a couple of different mechanisms or methods through which we can get paid. But those three are basically the prime kind of collaborators or enablers of those contribution payments into the program. Next, we have our website administration. You can see here we do partner with Tyler Tech for our public website, so they do administer that portion. For those in the know, again, Tyler Tech is administers a lot of the state websites, so that they help us with the public website. We also utilize Google Analytics on our website. that helps us analyze the traffic, understand who's going where, how much traffic is actually coming in, what pages are people going to, right? How are they navigating? So again, it helps us kind of see how people are using our website and in what ways so that we can support it better for them as we move into the future. Obviously, for claim administration, our partner Aflac there. By the way, I will go into a little bit more detail on the Aflac capabilities on the next slide. So you will see some additional details there. We do have some collaborations and integrations with Connecticut DOL as well as Connecticut DRS. From this perspective here, the integrations with Connecticut Paid Leave, these integrations are really around ensuring that we have fidelity between what is reported to us by employers or third-party payroll administrators versus what's reported to DOL as well as DRS, ensuring that there's fidelity across the three, and then also helping us identify true active businesses or businesses that may have closed or terminated. And then on the bottom, we have our fund recovery administration. So this is for, again, missing or late filings. And kind of, again, we first start out with some outreach to notify our employers about those late or missing filings, try to get them back into to file with us. So some of the things that, or some of the features or partners we integrate with are To-A-Finish. So To-A-Finish really does address verification and cleansing for us. So as we try to be electronic first, so we do try to utilize email communication first. However, if we don't have email address or contacts on hand, or that we see that those emails have bounced, so are undeliverable, we do default and drop to basically snail mail. So as part of any type of snail mail that we send out, we do need to verify that the address is cleansed to ensure that it'll actually get to its final destination. So we utilize To-A-Finish for that address cleansing and updating our system with the, again, appropriate USPS address information. For the actual document generation piece, we use a product called Opera that will generate print-ready documents for us. Those print-ready documents are then shipped to Allied Print Services, who does a lot of business for the state of Connecticut as well. So Allied Print Services will take all those print-ready documents and they will fulfill those on our behalf. And then the kind of last part of that journey is ScanOptics. So there are instances where mail doesn't get to its final destination. It may be rejected, or again, maybe a business has closed, so therefore it becomes undeliverable at that point in time. So mail gets returned. When mail gets returned, it gets actually returned to this vendor called ScanOptics, who basically digitizes that return piece of mail and then forwards it to us. Again, kind of saving us time because we can just directly inject that electronic message now into our core platform and then update our accounts as well to mark them as undeliverable in a sense, right? So that we don't continue to send out snail mail or pieces of mail that will always get returned to us. As I mentioned, we do try to be electronic first. So for email communications, we do utilize a vendor called SendGrid, which does give us, in a sense, really unlimited email capabilities as far as the number of emails that we can send out per day. So we do utilize them, again, for that email fulfillment process. And then last but not least, ultimately, we do utilize TSI for our debt collection services, right? So if there's something that we truly cannot collect on, those debts will be transferred to TSI, who will then pursue any of those debts on our behalf. I know that was quite a lot. As I mentioned, these are quite content-filled slides. So I will try to go through this as quick as possible, but realize that there's just so much. I could probably spend a whole day here going over information as far as how we support the operations and kind of what we do. But moving on to our next major slide here, it gives you a little bit of perspective of the features and capabilities that are supported on the AFLAC side. So again, from a claim benefit administration perspective, covers the far majority of our capabilities that support our, I'll say, constituents from a claim perspective. Again, similar to the prior slide, we do start off with our website. On the AFLAC side, you will notice that there is just a authenticated website portion. There is no public website. That's by design. So although AFLAC does have a public website, obviously, we do not mention it here. And AFLAC does not really go into the details of the Connecticut Paid Leave program on their website, right? We do utilize our website, ConnecticutPaidLeave.org, as our front door to the program. All information about the program is there. And then we again, as I mentioned, that is kind of the front door to the program. So users will log in through our website and then single sign on over to AFLAC to actually submit their claims or ask questions, look up their benefits, etc. So with that out of the way, what I'll mention here from the authenticator website, there are still two portions on the AFLAC side as well. One is really for our internal operations team. So as you can see here, it says CTPL admins. We do have a small user base who has enhanced privileges to what we call the admin portal on the AFLAC side. This does offer a lot of dashboard and reporting capabilities, so we can kind of see all the claims and details of those claims, as well as look into individual claim cases as well for support purposes. On the claimant side itself, we support, first of all, obviously, as they come in and they register, we do present them with their contact information so they can see what's on file there. They can obviously submit claims. They can see their previously submitted claims, as well as their benefit payment history across any and all of their claims. They also have a view of their benefit utilization. So out of the standard 12 weeks, right? How much have they utilized of those benefits within that year time period? They do have a leave calendar, pretty helpful, especially for reduced leave purposes, to add additional leaves through the leave calendar itself. They have the ability to contact us, again, direct outreach to AFLAC, any questions they may have on their claims, kind of first point of contact there with our vendor AFLAC. The message center, again, kind of having access to any prior cases or contact us inquiries that they've made, so they can see kind of all their questions that they've had historically, and again, the feedback or responses that they've received there. And then ultimately some additional resources and guides, right? Again, some helpful information, guides around how to submit a claim and how to utilize the portal itself. Again, for the authenticator portion, I didn't mention this, but is depicted, right? They do utilize our state enterprise identity platform, which is login.ct.gov, for authenticating users into the website. So same exact way as we do it on our side. Again, being able to have one login across multiple different websites. Then I will move on to the bottom portion around core platform capabilities. So again, this is internally facing features within AFLAC. I realize this is at a high level again, but purposeful for this discussion here. So some of the things supported as part of the claim operations are, first of all, identity verification. And since we're paying out benefits, right, we do want to ensure that the people are who they say they are for fidelity purposes. So we do have identity verification taking place there. We have some benefit eligibility processing that takes place to ensure that people qualify appropriately for their benefits. We have claim adjudication for claims that were deemed eligible. Obviously, utilization management, ensuring that people do not go over their utilizations, right, or benefit limits. They obviously payment fulfillment. So as we pay out the weekly or biweekly benefits, again, those are fulfilled one of multiple methods. Claim and payment history, obviously having the historical perspective of all the claims and the payments that were issued to each claimant. We do also support benefit overpayment administration. And there are times where people are overpaid for one reason or another. Usually they may have returned to work early, but have not notified, and therefore it becomes a little bit, may become an overpayment situation, which needs to be kind of clawed back in a sense. Again, some document generation, especially around payments and explanation of benefits, case management for the inquiries that come in, knowledge articles, again, for FAQs, obviously dashboards and reporting, automations, and the contact center, right? So obviously a lot of claims come in, and there's a lot of questions. So again, we have a contact center on that side for specifically benefit types of questions. And then also there are some state collaborations, right? So integrations, previously I mentioned on the prior slide, the integration with Connecticut Paid Leave Authority to exchange employer information, ensuring that employers are registered, whether they are in a private plan or not, and also whether they are a sole proprietor and registered or not. Aflac also utilizes DOL for our benefit eligibility verifications and wage verifications there as well. So they do utilize DOL system. They have access into their system to do that manually as well. I think I will kind of pause there from kind of the features and capabilities perspective. I do have one more slide though that I will go to just to give you a little bit of perspective of kind of what we're doing next and what we're doing this year. So our last slide here is really around our roadmap for 2026, just to give you, again, perspective of where we're heading and some of the things that we're going to be working on. You will notice, first of all, there's some darker blue and lighter blue lines here across this calendar. So the dark blue lines are really business or operations initiatives. And then the light shaded blue is really our IT-driven initiatives. So going through this list, give you a little bit of perspective. The first thing that we are looking to implement actually this month in a couple weeks is a capability around what we're calling coverage chronology. This will basically allow us to keep track of different coverage periods for employers. So currently we don't have that capability built into our core platform. We are keeping track of those periods outside of the platform, which is not the greatest method, right? We want our data to be together, so it's also reportable, etc. And obviously offers a better line of sight by a greater, I'll say, population of our operations team. So this will allow us to keep track of those coverage periods. And again, as we move into the future, there's different needs for different coverage periods, especially, with, as an example, like negotiate participation, right? There may be companies that have multiple unions, and some of those unions may be participating, some may not be participating. They may have different periods of participation. So again, it allows us just that additional layer of granularity to keep track of different coverage periods within an employer. The next item I have here is called KTLO. That stands for Keep the Lights On. So again, this is basically all just the basic features that we need to support and activities that we need to support to just keep our applications running as they are today. So things such as replacing security certificates, things of that nature, ensuring we do upgrades as different vendors upgrade their products, things of that nature. Again, just the bare minimums to keep the systems and applications running as they do today. The third item is really around our accessibility initiative. So there is a federal mandate around the WC AG 2.1 AA standard of accessibility. So this is around digital accessibility of content, ensuring that folks or our content is accessible to really everyone. There is a mandate to have our website and digital assets accessible to these standards by the end of April of 2026. So that is our target there for the overall delivery of those initiatives. We do have then after that IT security and vulnerabilities. You can see this spread across the year. It's not being delivered just at the very end of the year, but this will have deliverables across the entire year. And this does cover some items that encompass some findings from a outside security consultancy firm that we've had come in and assess some of our vulnerabilities. Next up here is another business initiative that we will be working on, looking for kind of mid-year delivery on this item. This is to be able to assess penalties and interest on just any late payments that come into us. I think kind of self-explanatory there. So I'll move on to the next one, which is tech debt and IT hardening. This one also kind of encompasses some efforts across the year, multiple deliverables here. So tech debt, for those that are not in the know with the IT lingo there, this kind of refers to things that really it may not have been delivered as part of a feature because it may not have been required for day one processing, right? Again, we do work in an agile fashion, so we try to deliver our solutions as soon as they're viable to utilize. We may not have all the bells and whistles, right? But as long as it's a viable product, we will ship that so we can start using that. And then, we can enhance and harden some of those features. From a hardening perspective here, we're really talking about enhancements that really ensure efficiency and error-free processing. Some of the things that we're doing right now is, for example, performing duplicate file validations so that we don't process duplicate returns or payments, for example. So we have had some partners have sent files in multiple times to us. Again, it does duplicate or replicate the data in our systems. So we're trying to obviously get rid of some of that noise by ensuring we have appropriate edits and validations up front that will prevent some of that noise in our system. So that gives you a little bit of perspective of tech debt and hardening, kind of what we're up to there. We do have a enhancement this year, which we're also looking to implement around our Contact Us feature. So we're calling this Contact Us Phase 2. Last year, we updated the Contact Us feature. There's still one piece that's outstanding, which our public website vendor is working on as well to deliver in January. But what we're trying to do here is basically help guide the journey through our Contact Us feature. So we do have a lot of Contact Us categories. There's a lot of cases that are misclassified and misrouted. So we're looking to how to create efficiencies there and clarify, what categories we'll say or reason types users should be submitting. So the idea with this phase 2 is to really identify a user, right, from the context of which they're coming to us from, right? Are they an employer? Are they a claimant? are they third-party payroll administrator, and then what are they trying to do? Again, that'll narrow down the categories that would be applicable for the context of that particular user. Next, we do have some online registration revamp that we want to do. So again, as employers, this is for employers that are registering on our site and registering their businesses. So today, there are some limitations with that registration process. We do find some inefficiencies. So we have a plan to revamp that registration process, make it easier and less cumbersome for our employers, but also help ensure better data fidelity there. We also have public website updates. So this is, again, kind of shown across the entire year because there's multiple deliverables. Most of these are going to be handled by, again, our business operations team, but there are certain updates that we still help support as well. So again, we kind of partner up with our operations team around those updates. So again, kind of minor efforts there, but it is something that we support across the entire year. The next feature here is a button to apply amended returns to collections. So this is something that we're going to assess with our finance team later on this year. This is a tentative initiative towards the end of the year. We're looking to see if we can kind of help automate amending filings when employers are in collections, right? So, and they haven't filed yet, or maybe they filed, but they were late. And now they also want to change, what that filing is, right? So obviously that does require some recalculation of penalties and interest. So some complexities therein. So again, something that was not part of our initial fund recovery initiative. Next up, we do have a lot of efforts around Tableau reporting and dashboards. This year, as I mentioned a couple slides ago, we are integrating Tableau with our core platform for some of that more complex reporting and dashboarding needs. So we are going to be working throughout this year to bring on our claim benefit team onto Tableau, our finance team, and our legal team for our I'll say better reports or more complex reports and dashboard needs. And then last but not least is our private plan annual report. So as you may have heard, Michael mentioned previously, our private plans do need to report to us annually. There is an enhanced process which Michael has introduced this year. What we're going to do is kind of test and learn from that process and assess that process around the May-June timeframe and see kind of what pieces or components of that we can automate to, again, remove some of those manual efforts that we have to handle today manually. So I think I will pause there. I think this will conclude my presentation, but definitely am open to any questions.
Okay, well, thank you so much, Matt, for that presentation. We really appreciate it, and it's glad to hear about important work the team is doing that we don't always hear about. So thank you so much for joining us, and we'll excited to see the slides. I'll give one last call for any questions for Matt before we move on to committee reports.
I have a quick question. Sorry. I was trying to get my hand raised. I appreciate it.
Oh, no.
I'm just curious, do we have a credit card processing fee attached to our transactions?
We made the decision at the very beginning that we cover there is a fee associated with employers using credit cards, but we cover it. So the employers do not have to pay a fee to process the money. It's something that we pay ourselves.
Okay, great. Because I remember legislation a while ago that put in a fee charge for different usage. So I appreciate the clarification. Thank you. And really, thank you, Matt, for that presentation. It was extremely in-depth and the flow chart was very helpful. So thanks again.
Sure, you're welcome.
Thank you, Melissa. Thank you, Matt. Thank you, Erin. Any other questions on this topic? Okay, thank you so much. We really appreciate it. We're going to move on to our committee reports. First up, we have policy and personnel. David Salazar Austin, floor is yours.
Oop. Sorry, everybody. Oop.
There you are.
Am I here?
Yep.
Hi. So this is my first time doing this. I apologize for any hiccups. But we did meet earlier this week on Tuesday. Is our regular meeting. It was my first taking over for Mike. Mike is still here, but no longer chairing the committee. So thanks, Mike, for all his service, obviously, on the committee. In terms of an update, let me just, we heard a lot from Michael, really the same updates that we heard earlier today. There was no new updates or old business discussed, so that really is the update from our committee.
Thank you so much, David. You did great. Next on our list of committee reports is outreach and engagement. Ava?
We didn't meet. We got nothing to report.
Always the fastest kind of committee update. And then our last committee update is finance and audit. Holly?
Yes. Good morning. We met last month and Dave walked us through the financials that you are going to hear presented this morning, and I will turn it over to Dave.
Thank you, Holly. Good morning again, everybody, and Happy New Year. We are going to go over the financial results for the month of November.
We can see your screen, Dave.
Okay, you saw it faster than I did. Okay, here we go. Month of November. So our operating results were $1.1 million, minus $1.1 million. That was $43,000 ahead of budget. Positive variance, a little lower than typical positive variance that we typically see. And that's because we paid a significant software license in the month of November that caused this monthly negative variance. But no cause for alarm because that is strictly a timing difference. We had budgeted to pay it earlier in the year and we paid it in November. So our software licenses are still ahead of budget year to date. And that line pays for a lot of what Matt just discussed a few moments ago. Year to date, our activity before the redesignation transfer is $2.4 million. That's over $1.2 million ahead of budget in terms of operational expenses. And most of the individual line items are ahead of budget. Only a few are somewhat negative. Moving on to bond activity, we paid almost $38,000 in bond money that is used for a lot of the work that, again, Matt just discussed a few moments ago to update and upgrade IT systems. We were just about $4,000 ahead of budget. And so year to date, we spent almost $273,000. There's still a negative variance of just under $62,000. We expect it to be around there for the next few months, if not the end of the fiscal year. But again, as I said before, no need for concern as we have just under $1.2 million of bond money available. And at the current spend rate, we will still have some at the end of the fiscal year, ending June 30, 2026. Let's talk about contribution activity for the month of November. It was just under negative $39 million. We did have a negative variance of just under a negative $3 million. That is, as usual, because of the benefits paid being higher than what we budgeted. That was by about $3.4 million. which was somewhat offset by other positive variances in contribution revenue, fund recovery revenue, investment income. Investment income, we earned this month at just under 4.1%, which is what we budgeted from the short-term investment fund account. That has gone down over the past few months as the Fed fund rate has decreased. So those usually follow somewhat in tandem. So we're monitoring that. Benefits paid for the month were just under $39.7 million. That averages to about $9.9 million a week. That is an increase from the past couple of months of $9.6 million, but we are not seeing a trend upward, as I will point out in a couple of moments. Year to date, our activity is at $25.4 million. That is a negative variance of $20.3 million, in part, number one, because of the benefits paid being higher than budget, and year to date, the contributions also being less than budgeted. The contribution fund itself is over $611.2 million at the end of November. So still in a good place, still meeting all the solvent requirements. Quick preview for the month of December. Our operating expenses were just under $1 million, nothing unusual there. Benefits paid were just under $38 million. The average weekly run rate for benefits was $9.5 million. So that has gone down from the $9.9 million the prior month. And we are starting to see the typical seasonality we see in benefit payments, and that they start decreasing towards the end of December and January. In fact, this most recent week in January, we had the lowest benefit payment week that we've seen in a while. So it looks like that trend will be the case, at least for the next few weeks. As far as the money coming in the door, we had contributions over $937,000 and investment income of $1.9 million. Looking ahead towards the end of the fiscal year, our projections haven't really changed much since the last time we spoke about this last month. So our activity before the redesignation transfer is expected to be over $1.3 million. That's over $1.5 million positive variance. We're still seeing the same trends we talked about last month. The positive variance is as a result of payroll and related expenses. Positions are being filled later than we budgeted, and the overhead rate for pension is lower than what we budgeted, and that will be the case for the rest of the fiscal year. Other items contributing to that positive variance are IT consulting services we anticipate to be less than what we budgeted, and other additional contracted services like legal and temp services are also going to be less than what we anticipated. And so all those are contributing to the $1.5 million we expect to be ahead of budget. Contribution activity, we expect to be at just under $13.8 million. Currently, we do expect $1.5 million positive variance, but as I mentioned last month, we are monitoring that very closely. We do expect benefits to be paid more than what we budgeted. Contribution revenue as of right now, based on what we're seeing, we do still expect a positive variance, but we are looking very closely at data that's being released, especially some federal data. A lot of that was delayed due to the federal shutdown. The federal government is still catching up, releasing that information. They should be caught up to date this month, actually, in January. They have 2 months to catch up. So once we see that data and analyze it, we will incorporate that into the future projection. And so if the contribution revenue needs to be tempered down, we'll adjust it as necessary. Also, this month is January. For those of you who have been here a while, that is the month when contributions for the most recent quarter are ultimately due to be paid to the authority. So once we receive that information and analyze that, we'll be incorporating that into the contribution revenue projection as well. So stay tuned for changes that will happen as a result of that. So that's the financial update. I am happy to take any questions at this time.
Thank you so much, Dave. Any questions for Dave or for any of our committee chairs? Okay, thank you so much, Dave, for that extremely helpful update as always, and thank you to all of our committee chairs for your reports. Moving along, I'm going to turn it over to Erin for her CEO report.
Thank you so much, Molly. I wanted to acknowledge that, excuse me, 5 years ago this month, we began the contribution obligation. So employers started payroll deductions on January 1st, 2021, which feels like yesterday, but it was 5 years ago. So I just want to mark that anniversary. As part of the sort of, it's been 5 years assessment, the outreach team is rededicating and reinvigorating our outreach to the employer population. We never stopped. We just added, but we are making a push this year to kind of brush up some of the outreach and make sure that employers, particularly the newer employers who've come on board since 2021, are fully aware of their rights and responsibilities, and look forward to some really great opportunities to do that in the coming months. I want to thank Matt and Michael for sharing some of the information you don't normally see. We don't talk a lot about the private plans, and we rarely talk about the IT. The IT in particular really is the driver that enables us to get all of our work done. So thank you for that information. If there are other parts of the program that you're like, hey, you only ever talk about it in the annual report and you don't really hear much about it, or if you have questions, about what we do on the things that are a little bit kind of back office stuff, please let me know. We're always happy to provide you as the board whatever information you would like to have, so you can help us continue to make this program a success. So please never hesitate to ask me questions about how things are going or what's happening with different areas, and we can do more presentations like the ones that Michael and Matt did today. And that's it for me today, unless anyone has any particular questions for me.
Thank you so much, Erin. Does anyone have any questions for Erin? Okay, thank you so much. Is there any old business anyone would like to raise at this point? Hearing none, is there any new business anyone would like to raise? Okay. In that case, may I have a motion to adjourn?
So moved.
I think I heard Melissa first. We have a motion. Is there a second on the motion to adjourn?
Second.
Here, David, thank you so much. Any discussion of the motion to adjourn? Hearing none, all those in favor of adjourning, please say aye. Aye.
Aye.
Any opposed? Any abstentions? Okay, the ayes have it. Thank you so much, everyone. It is 10:25 a.m. And this meeting is adjourned. See everybody next month. Take care.
Thank you, everyone.